Let's look at the Metals and Mining ETF. So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So metals and mining, it is here. Global metals and mining, 32% from the 52-week low. Still minus 21% away from the highs. The ticker is PIC. So we start here by looking at the chart, weekly data points. So something that we can see here is that it moves in these time cycles. Another thing, a pattern appearing at head and shoulders. So let's draw in the various head and shoulders because they are rather relevant now. Pretty substantial head and shoulders here. This is not a head and shoulders pattern, but it's head and shoulder-ish. If we move in a bit closer here, you can really see the other head and shoulders. Let me do it like this. So right here you do have, let me get the right tool. So shoulder, head, and shoulder. And we are currently drawing a head and shoulders pattern. In the process now of forming the right shoulder, we were rejected at the blue 100-week moving average, which is definitively a sign that sort of like the classical behavior of this ETF is back again. So this is bearish given the history. Any person looking at this chart, especially a bull, will look at this and be like, I'm not too sure about holding PIC at this point. You know, looking at the history here, it doesn't really embolden the bulls. Looking at the dailies, rejection from the blue 100-day moving average. So there's a lot of things here that isn't really ideal for the bulls. Looking at weekly RSI and PPO, we are not really overbought yet though. Looking at the dailies, it's not overbought either, so there's no like danger signal from those indicators. The primary issue here is definitively just the head and shoulders. And this is head and shoulders where we were rejected like at key moving averages. So head and shoulders. This is a bearish one. I think I will give this one, give it -6. This is clean and bearish. Next we will look at the seasonality. So we start here to the left, looking at the last 10 years in red. We don't have data until we get into mid-April, but the data here is bearish. Looking at the last 5 years in green, could be a bit bullish though into later April, and the same thing here with the last 7 years in blue. Looking at the table view, April, it is sort of a bullish month looking at the sum, but when you actually look though at the performance over the last years for April, it's not really a month that inspires a lot of confidence because it can be very bullish. You see that the bullish months are really bullish, but there's been some bears here as well. May had a tendency to be rather weak. Recently it's been bullish. So basically the seasonality here for this is it's messy. It is rather messy. I do think I will give this one, so I will give it slightly to the bulls, but there were a lot of issues as well though for the bulls. I give them a 2, but there are issues here. This is not a clean bullish seasonality. Let's compare the iShares Global Materials ETF MXI with the iShares MSI Global Metals and Mining Producers ETF, the PIC, the one we are focusing on. Performance-wise, year-to-date performance, MXI is beating PIC. Beta is a bit lower as well. Price earnings, however, is substantially higher, 10.6 versus 6 basically. Yield 4.61% versus 6.73%. So really good yield here for PIC. 106 holdings versus 260. Yeah, and here you can see the breakdown. In this case, the fundamentals here were okay for PIC. Not like roaringly bullish, but I give them a 4. Let's compare PIC against the MXI, SPY, and the dollar index. So looking at long-term correlations, 88% here with S&P 500, 95% with the global materials ETF, and minus 6% here with the dollar index. Short-term correlations, 69% with S&P 500, 98% with MXI, really high. Minus 91% with the dollar index. So definitively there's a pretty strong correlation here with MXI. So what happens with the MXI will definitely have an impact on PIC. MXI is also in the process of forming a head and shoulders pattern, which is bearish. Looking at the history of MXI, it has more a history of rounding tops than head and shoulders patterns, but the dynamics behind the head rounding top and the head and shoulders are sort of similar-ish. The sort of like the difference is that the head and shoulders is formed by the bulls fighting. You know, there's a valiant attempt, at least from the bulls, to have breakouts as the head and shoulders forms. But the key thing, right, that flips the attempted breakout to bearish is that when the head is forming, you do see the bears go back into action in a big way. And that is where the dynamic changes. Because if you look at this chart here, right, where you have the shoulder and the head forming, this looks pretty bullish. You have a breakout. But this is where it's, this isn't ideal. And the right shoulder is really where the bulls sort of have the last attempt. And so a head and shoulders pattern it's not as bearish as a rounding top, simply because of that right shoulder especially, which is really like it is formed because there actually are bulls trying to prevent a breakdown. So yes, there's potential bullishness in the head and shoulders pattern. Okay, so let's look at the seasonality. Bullish here for MXI, April. If we lived in 2021, it's a fantastic month, but then 2022 came, which sort of messed up the seasonality. But overall, this is actually a pretty decent month, though. So let's actually compare PIC with MXI, like MXI. Okay, relative performance. Interesting level on RSI, but not like a screaming buy. On the dailies, there's a lot of noise, just a lot of noise though. In this case, we do actually have a bit of a rounding-ish topping pattern for this pair. However, we did recently get oversold on RSI. Let's look at the seasonality. Really not good though for PIC. Yeah, April is also a month where PIC has a tendency to underperform the MXI, May as well. Yeah, so that's, I mean, you have to go into July to really get bullish on PIC versus MXI. Okay, so this really sort of flipped things around. Yeah, I think I will give it -6 here though, in favor of the bears. This wasn't really ideal for PIC. We do end up with -1.5 in favor of the bears. In this case, we are at head and shoulders. That is like the key indicator in play. I do think there's more reasons to be bearish than bullish. This is a pretty clean head and shoulders as well. This ETF has a history of head and shoulders. Yeah, so all in all, yeah, the thesis stands. So we do have some time left. Let's look at various stocks in the nanotech space, which is it's in the materials space, but it's certainly more exciting than the PIC group. So let's avoid the over-the-counters. So let's start with the nano dimension. Yeah, I mean, it's really low though. So if you start to like play with the percentage tool, like if we hypothetically speaking were to go up here, we're talking 500+% gain. But there's obviously something. Yeah, I mean, there is a change though. I mean, we've gone from being like bearish to now bullish. This is a rounding bottom pattern. It's a bullish pattern. But this is a big mover. So if you were to like buy the stock here, just going down here, right, would be like a 16% pullback. So this is definitely the habaneros in your portfolio. but let's look a bit further. We recently had a rally. I'm not a huge fan of buying stocks after a rally. Seasonality is not really that favorable at the moment. April is the second worst month for nanodynamic. That's not bullish. Let's look at the fundamentals. Price book, historically a bit elevated. Price to sales is very low. Price earnings could be lower. Yeah, this one is not especially interesting at this point, but it's one of those to have on your radar. Maybe after a pullback, it could become interesting. BRKR, that's Broker Corporation. That's more of a larger cap nanotech stock. But this is also after a very protracted rally. I'm not a huge fan of buying after rallies. But then the question is, okay, after this rally, is it shortable? Not really on the weeklies, not like super overbought, nor on the dailies. So yeah. So technically speaking, it's not like a short. The seasonality is also favorable to the bulls. So yeah. So that one is neither shortable or buyable. Atomera Incorporation, also one of those that's seen a very substantial pullback. Looking at the red line, we are down to a horizontal support level. Are we oversold? Yeah, sort of. On the dailies, rather low. Seasonality. So the seasonality here to the left is not that favorable. To the right here, April is a very weak month, minus 7% so far. However, May and June are pretty bullish, I mean, relatively speaking. So it means that there actually could be a buying opportunity here in Atomera this month, which would benefit from May and June. Looking at fundamentals, price book is really low though. This is value. Price to sales is also historically really low, but price earnings is actually a bit elevated. So let's explore this one a bit further. It's definitively interesting though. Looking at forecasts, there's like one analyst though with the price target, but it is really bullish 120% upside, strong buy. But yeah, we don't have that much to go on here. But I mean, if you want to have like some spice in your portfolio, to have a bit of a bet, because this is like, when you have a chart like this, I would say this is sort of like in the wildcard portfolio, but it's a fantastic alternative to like playing the lottery or other types of gambling. But yeah, I would say that there's a lot of risk here. Because a very slight pullback here would be big percentages. So let's get the tool like that. Going down here just would be like 12%. Going down here, all of a sudden 31% loss. But a gain here to break out to new highs would be like 692%. So you could get a lot of moves here pretty fast. The tricky thing with these kinds of stocks is that it's really tricky to pick a stop loss level because the moves are just too big. You need to have like a rationale behind your stop. So that's why I occasionally will have positions without a stop. At least the initial position will not have a stop loss, simply because when you start to operate with like minus 40% potential stop levels, it sort of doesn't, at that point you are better off just gambling on a return instead of managing it in the way you would classically do with the stop loss. The stop loss levels, they work well if they can be more tight. But in the wild card portfolio, where you have various positions which could like, multiple X, those are also likely positions that also could just all of a sudden be cut in half and very, very quickly. So yeah, it is what it is. But yeah, we have looked at a bunch of stuff now. Hopefully the microphone here is also better than it was the last time. But Shure MV7 mic, it's a really, really good mic, at least on paper. But it's really expensive as well. I'm not a huge fan though. I did have a blue mic before. The blue mic is really good. It was like the Yeti X Pro. it picks up sound wherever it is. It's very flexible. You can have it a bit away from you and it will pick up the sound. This Shure mic, it's very dependent on you sitting fairly close to it, and it's also rather quiet. So now I have ramped up the gain in OBS, but I shouldn't have to do that. This mic literally had one job, and that is to pick up sound. So I shouldn't have to use a gain at all. So yeah. But yeah, so I would advise against this mic. I'm making it work now, but I'm looking at the Rode mix. I think they are actually better. Because they have a wider portfolio than Shure. Also, a lot of mics that are made to record sound out in the wild. So they just have just broader expertise when it comes to picking up sound from mix in a wide variety of conditions.